Hi guys, welcome to another video by Optionables. My name is Saket, and today in this video we are going to look at what happened to the markets, what we can expect tomorrow because tomorrow is an expiry day, and finally what happened to our trade. So today markets actually opened up 1% higher. So the reason was yesterday we had already discussed that there was some positive talks between Russia and Ukraine, and this positive sentiment was carried on from Europe to US to Asia, and today even our markets ended up opening higher. Throughout the day there was consolidation in the market, and finally as usual markets ended up closing almost at the highest point of the day. So if not the highest, almost at the highest point of the day. Markets opened around 17,450, and throughout the day it consolidated between 450 to 500. But the thing is, there was one sudden fall in the market around the time of 1 o'clock. So we had seen this yesterday also, but this time the fall was much more severe. So there was almost around 80-90 point fall in the market, which just happened suddenly, and immediately there was buying. So this pattern was seen yesterday also, and today also we witnessed the similar thing. And in this fall, most of our stop loss actually got triggered. So we'll talk about the trade later on. First we are going to see what happened to the markets and what we can expect from the markets tomorrow. So today all the sectors ended up gaining. Banking and finance index was up, IT was up, FMCG was up, Reliance and oil, so the entire oil basket was up. Only metals ended up lagging little behind because they had outperformed for so long. If you actually look at from past 1.5 months, it is only the metal index which is doing really well. So once the entire broader market starts to do well, the metals are likely to correct because the money will obviously shift. So people will start booking the profits in metal stocks and slowly shift towards the other stocks. So today market has closed at a very crucial level of 17,500. So the closing happened at 17,496, just slightly below 17,500, and 17,500 if you see has the highest amount of put as well as call OI. So that is extremely important for us to see how exactly the market is going to behave tomorrow. So both on the put front and the call front, 17,500 has the highest OI. So most likely, in case if there is no news coming up, we might not see a huge gap up or a gap down in the market. So this is my personal expectation. So just now the time is around 5 o'clock. Things can change overnight. But my expectation is, since there is so strong call rating as well as put rating at 17,500, if there is no news flow or if there is no extra positive sentiment or negative sentiment, then the markets might not open with a huge gap up or a gap down. So later on we will discuss what are the trades that we have taken for tomorrow, and also I will be discussing more about the intraday trades as well. So for that we'll be now going on to the screen. So before that I would also like to tell you one more thing. The brokerage which we use, Firstock, is offering 100 free orders to whoever opens an account using the link in the description below. So if you're interested, do check that out as well. So now we'll be quickly moving on and looking at the expectation as well as trade. So before that I would just like to give you a brief summary that today all the stop losses got hit. So we have 3 entries in the system trade, one at 9:30, 11:30 and 1:30. All the 3 stop losses got triggered today. But obviously there is no question of being in profit when all the 3 stop loss on all the 6 sides get triggered. Both CE as well as PE got triggered for all the 3 trades. Totally 6 stop losses got triggered today, and there is no question of being in profit. But in spite of this, we were able to do some small adjustments where we were able to reduce the loss with our intraday trades. We ended up gaining somewhere around 2.5 lakh with our positional trade. All in all, we ended up losing somewhere around 30,000 from the overall day today. So including positional and intraday, we lost around 30,000. If you look at intraday alone, we lost somewhere close to 3 lakh. So it was a good thing because the loss would be somewhere close to 4.5 lakh in case if we hadn't adjusted. With small adjustments, we were able to reduce the loss to 3 lakh. Now we'll be quickly moving on to the video and we'll discuss this more in detail on the screen recording. And meanwhile, if you're liking the content on this channel, do not forget to hit the like button, share this video as well as subscribe to Optionables. Thank you so much for joining, guys. Hi everyone, welcome to another video. So what you see right on the screen here is the trading terminal, and right down below we have the today's M2M. So today we ended up losing somewhere around 30,000, and this was majorly due to the intraday trades. So in positional trade we ended up gaining quite well, but due to the huge wick what we got in the intraday trade, we actually ended up triggering all the stop losses and we went to a loss. So first I will discuss more about how we actually ended up losing on intraday trade. There were small adjustments which we did which helped us save a lot of money. So the thing is, I'll be sharing that as well. Without wasting time, we'll be quickly moving into the charts. First we will see what happened to the trade, and then we'll also discuss upon what to expect from the market tomorrow. So we usually take the entry around 9:30. So we ended up taking 17,400 short straddle as usual, because the market around 9:30 was trading around 17,400. So we have shorted both CE as well as PE, and very quickly the call side stop loss got triggered because the market started to shoot up, and maybe within next 30-45 minutes the CE stop loss actually got triggered, and now we were only left with a PE leg. And we were also quite happy with it because we were expecting the market to head up higher. And that's the reason. The idea was, once your CE side gets triggered, that means you will be only left with a put leg. The chances are that in case if the market ends up moving higher and consolidates, then this leg will start to decay quite a lot. So this is the idea what we had. So similar to what we expected, the market did shoot up and it started consolidating around 17,500. So this is what we wanted as well. So then we got our second entry. So first entry is 17,400 where the C side stop loss is triggered, and now we have a second entry at 11:30 where we end up taking 17,500, and then we have the third entry around 1:30 where we again end up taking 17,500. So that means now we have a 17,400 put option, and we have 17,500 short straddle at 11:30, 17,500 short straddle at 1:30. So what ends up happening here is, suddenly we get this huge wick where the market falls around 80 points, and just in a matter of around 5 to 10 minutes. So there is a huge 80 point fall. In this fall, what ends up happening is this put option leg, because we have got the stop loss to cost. So from the previous stop loss, the stop loss has been reduced to cost. So this put option leg, 17,500 PE of this entry as well as 17,500 PE of this entry, all three put options stop loss will now get triggered. So the market falls, and within couple of minutes, so it just took almost a gap of 30 seconds each, all the stop loss ends up getting triggered. So once the stop loss is triggered, so what are the legs we have now? So we only have a 17,500 CE leg and 17,500 CE leg, because 17,500 PE stop loss is triggered, this PE stop loss is triggered, both CE as well as PE stop losses are triggered over here. So that means we are only left with 17,500 CE leg. Once that happens, we get both 17,500 CE stop loss to cost. So as we get the stop loss to cost, towards the end, again the market ends up shooting higher. So the market will slowly start to go up within next 30 to 45 minutes, and both stop loss, that is 17,500 CE, 11:30 entry and 1:30 entry, both the stop loss gets triggered. So today we literally got triggered with all the 6 stop losses. So the 9:30 entry, the stop loss got triggered, 11:30 entry, both the stop loss got triggered, and 1:30 entry, both the stop loss got triggered. So that means there is very slight chance you will end today with a profit. So today we were working with 3,500 quantity, and the maximum loss what we are going to get if all the stop loss gets triggered is around 4,20,000. So this is the worst case loss what we are going to have if all the stop losses are actually hit. So here the thing is, instead of losing 4,20,000 today, we ended up losing somewhere around 2.5 lakh. That means we ended up saving somewhere around 1.7 lakh today. So I'll explain how exactly this ended up happening. So what happened was, as I saw, there was a huge wick here and the market started taking support at 17,450. So I was more or less convinced that the market is going to bounce back up because there was a huge short straddle buildup at 17,500 and it didn't look like the market really wanted to go down, because we have seen that couple of times also in maybe past 1 week. You can see every day towards the end there has been very strong buying coming in. So that's the reason I was expecting some buying to come in. So what I did now was I ended up shorting additional puts of 17,500 again. So this is one thing which I have done against the system. So the thing is, usually when you follow a system trade, you don't bring in some discretion into it. The main reason is you let the system perform on its own. You can see that many times we do this, where we also add some bit of discretion into the system. So you might have seen us do this before as well. So sometimes it helps, sometimes it doesn't. Let's say today was a day where the fall actually continued, right? So on such days, if I end up shorting additional put, it defeats the whole purpose of following a system, right? But today, because I was convinced that we might see a bounce towards the end, I shorted 17,500 puts additionally. And this actually ended up saving us a lot. I shorted 6,000 quantity of puts, somewhere around 85 rupees, and I covered 6,000 quantity of puts somewhere around 55 to 60 rupees. So this actually ended up saving us close to 1.7 lakh, and overall we ended the trade with negative 2.5 lakh. So that is with respect to the intraday. And now coming to positional we ended up gaining somewhere around 2.2 lakh, and overall we have a loss of around 30,000 as we saw. Now we'll discuss little about what we can expect for tomorrow. So today we saw some very strong call unwinding and little bit of put writing over here. So you can see that the call change is negative 7 million. When we actually look at this particular thing, so we will just leave 18,000 away because that is too far away, and right now it is not so relevant as well, because 18,000 is literally around 500 points away and we are definitely not expecting the market to move towards 18,000. When you look at this area right over here, so let's try to focus within 300-400 points of the area, and you see here the highest writing of calls and puts actually comes around 17,500 itself. So there is a very strong short straddle being built around 17,500. So now if you were to ask me what we can expect from the market, so I am more or less expecting the market to end between 17,300 to 17,700. So this is the view what I have for the market, that is 17,300 to 17,700. So this is where I am expecting tomorrow's expiry to happen for Nifty. So I might be totally wrong, but this is my broader expectation, because right now the short straddle is pricing somewhere around 130-150 points. So I am expecting this range to be held for Nifty. So when we come to Bank Nifty quickly, here again we saw some very strong call unwinding at 36,000 and some put writing at lower levels. So again, if you look at the overall open interest, we can see that put call ratio is around 1.1, which is more or less again suggesting some kind of a consolidation. So I would expect the market to trade in the range of 35,500 to 37,000 for tomorrow. So this is the broader expectation what I have from the market. So what position am I actually carrying for tomorrow? There is one position in Bank Nifty which I am actually carrying, and that is a 36,500 short straddle. The idea behind this is very simple. I'll be squaring off in case we open up higher. So I had shorted this in the opening itself. I have shorted 1,250 quantity. So again, I am very low on the position sizing as well. So let me just show you this, and you can see the break even is around 36,000 to 37,000, almost around 400 points on the downside and 600 points on the upside. So here the thing is, you can see even if the market actually ends up moving 1,000 points, my loss is going to be around 6 lakh. So this is again going to be around 1% of the capital, and that's the reason I'm okay with it. Since the VIX is falling, it is almost below 20, not exactly below 20. So the amount of volatility what we can expect will also be low. So that's the reason I'm definitely not expecting the market to move around 1000 points. But even if that happens, we are going to lose somewhere around 6 lakh rupees, which I'm okay to bear the loss. Right, so that is the one trade what we have, and you can see that right over here. Apart from that, we also have some positional trades of 28th April, and we have also shorted some Kotak Bank right over here. So one good thing today is both FIIs and DIIs are net buyers. So both ended up buying around 1000 crores, which is a very positive news what we have. So with that, let's see what exactly happens. So tomorrow is a very crucial expiry, as I have told in the earlier videos as well. And tomorrow I'll also be making a yearly review of what actually happened throughout the year. I'll be giving you a detailed summary. So with this, we also come to the end of this video. And if you're liking the content on this channel, don't forget to hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys, and see you soon tomorrow.